Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
Yesterday, the euro dropped by 76 pips on rising volumes, as the S&P 500 fell by 0.28%. Market participants paid closer attention to Jerome Powell's remarks and realized there would be no 2 rate cuts by year-end. Investors, out of inertia, kept October cut expectations high, 97%, but reduced the probability for December from 81 to 72. U.S. Treasury yields increased slightly. Today, data will be released on August durable goods orders, forecast minus 0.3%. The final quarter 2 GDP estimate, expected unchanged at 3.3% year-over-year. Weekly jobless claims expected up from 231k to 233. And the core personal consumption expenditures price index for quarter 2 focused 2.5% versus 3.5% previously. It appears that these prints are unlikely to reverse a market already sliding into crisis correlation. A key support for the euro is the daily MACD line, it's a blue line on the chart, at 1.1717. A close below this level could trigger a medium-term decline in the euro. The downside target is 1.1605. Beyond that, the next target could be 1.1495, the June 5 high. The Marlin oscillator signal line has approached the boundary of the bearish zone, but has not yet crossed it. The situation is developing where both price and oscillator may move below their respective supports simultaneously, but this would require a bit more consolidation. On the 4-hour chart, the overall situation is bearish, as price trades below the indicator lines. The Marlin oscillator stays in negative territory. However, the oscillator is slightly rising, which sets the stage for consolidation. Markets await this evening US data.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility for GBPUSD over the last 5 trading days is 88 pips. Moderate for this currency pair. On Thursday, September 25, we expect movement within the 1.3359 to 35.35 range. The higher linear regression channel is pointing upwards, showing a clear upward trend. The CCI technical indicator entered oversold territory again, which once more hints at a resumption of the uptrend. The GBPUSD currency pair is once again in correction mode. But its long-term prospects remain unchanged. Trump's policies will continue to put pressure on the dollar, so we don't expect any growth from the US currency. Thus, long positions with targets at 1.3672 and 37.33 are much more relevant if the price stays above the moving average line. It's a sign line on a graphic. If price moves below the moving average, consider small shorts on a purely technical basis. Occasionally, the US dollar may exhibit corrections, as it does now. But for a genuine, sustained uptrend, we need to see genuine signs of the end of the global trade war or other major positive factors.
That's all for today. See you online soon.